Everybody, Trader Mike here. Back with you for another movie. Today is Monday, January 21st, 2010, and what a weekday we did have today in the markets. We started with a nice, probably 1.5% gap up here on the SPY and in the S&P, and we actually reversed it all to close down 0.39%. We are still above the 200 period moving average and above the 20 period moving average right here, but we just had an absolute huge outside day reversal pattern where we went from, actually let me get the numbers here for you, we went from the highs of, what were the highs? The highs of 113.14 all the way down to 110.79. So over a 2.5 point range here on the SPY today. We're reversed, but we are still holding over this green line, which was acting as resistance prior back here in May, and we kind of paused here a little bit in June. So as long as we can hold this line here, we should be able to move a little higher, but we were very weak intraday. And right now what I'm going to do is I'm going to actually bring over to you my 5-minute intraday chart and show you what I was looking at intraday here. Now right here we have the 5-minute chart of the SPY. Let me just make this a little bigger so you all can see it. And what I was looking at is right here, this pink line is actually gap fill. So we started trending lower. After the open, we popped back up and we started trending lower, and we couldn't regain the 20 period moving average all day, except for just 3 candles here right around 2 o'clock. And once we lost that, we were coming down to this pink line here, which was the pivot and yesterday's close. And once we got down to this should have acted as some sort of support for the market where we would see a bounce up off of it here, but we didn't actually see that bounce at all. If we zoom in here just a little bit, let me just take out some of the outside of regularly traded hours action. If you look in right here, we actually sliced right through it and came all the way back down here. So this to me is not the best sign with this reversal here in the market. We just sliced right through that area, which should have acted as some support here, and then we also had another area of support, which was yesterday's or Friday's lows right around 111.40, 111.42, and that didn't hold up at all either because we sliced right through that, and we seemed to regain a little bit of it on the close here. But so looking out a little farther in the market, we definitely need to stay above this 200 period moving average in this 111 to be able to move higher. If not, we're looking at some possible support coming into play here at the 20 and this lighter green downward trend line here. And to get a close up on that for you, somewhere right around 109 would be support. There's also key level support at right around 109.50 and 109.42 on the downside. Later in the week we do have some action for the Fed, so we're going to look at that as possible, adding some possible momentum, whether it is to the upside or the downside. Today I kind of kept it light, really didn't add to many positions. As you did see, I didn't put out a watch list last night because when I did go to put out the watch list, the futures were up pretty high and it signaled that we may gap up. So to me, there was really no possible point of putting out a watch list. I did nibble a little bit on some Microsoft 25 July calls today, and that's about it. Still continue to hold the portfolio that is hedged, and that's about it. If I see any trades come up this week, I'll let you know. I just want to give you an update on the reversal that we had in the market today. Other than that, traders, good luck. Take it easy. Happy trading.